Have you ever noticed your high-yield savings account APY change and wondered why? You're not alone. The recent rate drop at ROGER Bank from 5% to 4.12% has left many of its customers scratching their heads. So, what's the deal? Why did ROGER Bank's APY fall, and what does this mean for your savings? First, let's quickly review what APY means. APY, or annual percentage yield, is the real rate of return you earn on your savings account over a year, considering the effect of compounding interest. Compounding is when your earned interest starts earning interest itself. So, if you earn 5% APY, your money doesn't just grow by 5% of your initial deposit, it grows by 5% of your initial deposit plus all the interest that has already accumulated. The biggest factor influencing any high-yield savings account APY is the federal funds rate. This is the target interest rate that banks charge each other for overnight loans to maintain their reserve balances. While ROGER Bank's APY isn't directly tied to this rate, it's heavily influenced by it. When the Federal Reserve raises the federal funds rate to combat inflation, banks and other financial institutions often respond by raising their savings account APYs to attract more deposits. These deposits are a source of funding for the bank. Conversely, when the Fed lowers the rate, banks often follow suit by lowering their APYs. This is exactly what happened with ROGER Bank. The Federal Reserve, or in this case, the Bank of Canada, has been gradually lowering its policy rate. This downward trend in the central bank's rate created a chain reaction, which ultimately led to the decrease in ROGER Bank's APY. Another key factor is market competition. High-yield savings accounts are popular because they offer much better returns than traditional savings accounts. To attract customers, online banks and smaller institutions like ROGER Bank often offer incredibly competitive rates. However, these rates are not set in stone. Think of it like a promotional offer. When a bank first enters the market or wants to quickly grow its customer base, it may offer a very high APY as a loss leader to get people in the door. Once they have a significant number of customers and deposits, they may adjust the rate to a more sustainable level. ROGER Bank's initial 5% APY was a very strong market offer, and as the bank's deposit base grew, a slight reduction was a strategic move to align with broader market conditions and the bank's long-term financial strategy. They still offer a competitive rate, but the days of an introductory, super high APY are often temporary. So, what does this mean for you? Don't panic. A 4.12% APY is still excellent and well above the national average for traditional savings accounts. It still provides a fantastic, low-risk way to grow your emergency fund or save for short-term goals. While the drop may be disappointing, it's a reminder that these rates are variable and can change at any time. The key is to stay informed. Always keep an eye on your bank's rate sheets and compare them to what other institutions are offering. You might find a better deal elsewhere, or you might find that your current rate is still one of the best on the market. With that said, thanks for watching, and until next time.